Let's chat a little bit more about where exactly is the market headed. What exactly should investors be doing? We've got with us the head of equity research India at BNP Paribas, Abhiram, joining in the studios right now. Abhiram, hi, good to have you in the studios. You know, the debate now is that we've moved 8.5% on the Nifty since the corporate tax cuts were announced. The EPS upgrades which have come in for Nifty earnings are anywhere in the range of 7 to 8%. We've already made that move. Is the best already in the price? Or do you think the prices can move much higher than what the upgrades are?
Good morning. Thank you for having me here. You're right that the first order effect or the first order impact of these tax cuts are pretty much in the price on the last move of the last 2 days. We calculated, for example, in our coverage, the tax rates, effective tax rates earlier were about 29%. That'll fall to maybe about 23%. And that leads to about an 8% odd potential earnings upside. And the Nifty move in the last 2 days of about 8.5.
It captures it all.
It's practically captured all of that. I think what's more interesting is, apart from just this move, there are a couple of first order effects. One is that equity investors have actually got an immediate benefit compared to just about anybody else. And the second point is that the government has probably given a pretty strong message that they're willing to do what it takes to pull the economy out of the current situation. And I think that is what most investors will probably take away. Now, it's interesting to note that in the Nifty, only about 15 odd stocks will be trading well above the historical averages. The entire BSE mid and small cap are trading well below the historical levels, probably one standard deviation below. And therefore, what this move could do is to broaden the number of stocks that investors could look at. So far, we've had a very narrow sort of a move. I think that's the first order impact. I think the second order impact is more interesting, and that's the impact on the real economy. That's much more difficult to quantify. It may not happen in the next few days, probably in the next few months or years also. And the tax cuts obviously should boost infrastructure spending, setting up new capacity, etc. It's interesting that...
But that doesn't happen overnight.
It does not happen overnight. In fact, that's the reason why the horizon provided is until 2023. And also the option to allow foreign companies to come in and set up shop in India as a result of that. And it's interesting, this is all timed along with the China-US trade war. So it is just possible that we attract some of that investment. So I think that is the move on the interesting part on the investment side. On consumption, actually, it's a bit more complicated. The hope, obviously, is that when you cut tax rates, companies will reduce product prices and as a result boost demand. But if you kind of do the calculations, I think that is more possible on the consumer staples side, if anything at all, and possibly on select products. And the price cuts could be measured as well. That could lead to slight improvement in demand in products where the demand is elastic. However, on the consumer discretionary side, small cuts in prices do not usually change volume. And we just calculated in our work today that at best, for example, auto companies could cut between 0 to 1% on prices, and I think they may not do that at all. So the impact on the consumer, immediate impact is a lot more measured, and that's the point here.
So, given that we've seen them the government step up on all fronts, there's still a call that, okay, until we actually see divestment or some impetus to government spending, we won't see a complete 360. But at least some of these measures are expected to boost lending, to start to see that transmission in the economy. Do you see any headwinds? As you mentioned, it may be difficult to quantify the real impact, but what can we expect over the next couple of months?
Next couple of
quarters.
Quarters, all right. So let's look at some of the positives for the second half. First is, of course, what we just had on the tax cut. Then you have to kind of acknowledge that in the last 2 or 3 months, the government has announced several measures around lending, around improving liquidity. Then there's money being handed out to the consumer on the rural side through the PM Kisan scheme. Only a part of that money is yet been paid out, so that could happen in the second half of the year. The monsoons were reasonably good. So I would say there have been quite a few brewing positives for the second half. You can't avoid the negatives, of course. Some of them could be a little more structural in nature. For example, on the rural side, you see wages are quite poor. Unemployment, even on the urban side, is increasing. So that leads to lower savings rates. Transmission of rate cuts hasn't really happened. The RBI has, of course, cut interest rates by quite a bit, about 110 basis points this year. But the lending rates have practically stayed where they are or even have increased in some cases. So there's no doubt that there are several negatives as well. I think what one needs to bear in mind is that last week, for example, even around this time last week, there was extreme pessimism in the market. Right? If you see the picture on the global side, of course, growth is slowing everywhere. But it's very possible that central governments, central banks across the world act on monetary policy. And that could probably help a market like India. So I'd say we have to be kind of balanced on this, take the positives, take the negatives, and go back to the homework.
Do you think companies will pass on that tax benefit to consumers? That's the big question.
As I mentioned to you earlier, on the discretionary side, I doubt whether they will pass on that benefit.
And in terms of new investments?
New investments, absolutely. See, there are many areas, especially in autos, for example, where several companies are running well above their usual utilization levels. The economy as a whole, the utilization levels are above 75%. So it is obviously a requirement that companies set up new capacity. But as I said, these decisions don't happen overnight.
Yeah, because what if they're content to wait and watch?
Well, if they're already on the fence and the tax cut only helps their cause, they will probably do it quicker than we expect.
True. For an investor, what does it mean? Have you missed the bus already in the last 2 days? If you were not fully invested, if you were sitting on cash, have you missed the ride already? Because like you said, in the near term, we've already seen the best that it has to. Or do you think there are those mid-cap and small caps wherein the catch-up has just begun and there are opportunities there?
I think if you missed the rally over the last 2 days, you have to be kind on yourself. These are not, these are...
Don't be a cowboy.
You cannot obviously expect announcements like this on a daily basis, and it's okay if you missed it. But I think going forward, and as I said, the best of the earnings upgrade is in the price. What we do is we follow a very systematic pattern to invest, to creating our portfolios. And we call them quality lists. We have two variants actually, one on growth and one on value. So what we look is really intersection of companies that satisfy quality requirements, offer reasonable earnings growth, and at the same time have decent valuations. It's almost extremely it's impossible to find a company that satisfies all these requirements, but we're trying to find the best fit. And today, the stocks that dominate those lists are actually in the financial services space and insurance. We do have several companies on consumer staples. Like I mentioned, staples are probably likely to benefit more than discretionary.
Okay, so let's go one by one. Let's get with the list of financial services first. Where do you find a congregation of all these parameters that you talked about?
Well, there's absolutely no doubt that it's available mostly in private banks. And not just now, but over the last 10 years or so, if there was one space which has benefited from all the themes in India, starting from premiumization, penetration, digitization, all of that has actually happened in private banks. And the next could potentially be insurance. And so that's where these are the two sectors that we're most positive on.
So when I look at your additions overall, the consumption trend is pretty clear. I think that we've talked about, and even financials. I also see, for instance, a Power Grid, GAIL, in the large caps. What's the rationale there, or what are you looking at when it comes to that segment?
Sure. Well, I won't be able to comment on individual companies, but as I said, it's what we do is follow a systematic approach to this. It so happens sometimes that some stocks have moved a lot in the last few months or few days, and therefore they become expensive and drop out of the list, and others who are less expensive probably move in there. Sure. That is the most common reason for stocks moving in and out on a short-term basis.
Okay. Right, I think, Abhiram, thank you so much for joining us.
Thank you.
And talking us through how you're analyzing the recent moves by the government.